Hi, I'm Isaac. Today I'm going to take you through a trade by one of our elite traders. This is an oil trade. This is from Tuesday the 25th of August. All right, let's crack into it. Okay, here is the 1 minute chart. Basically, the trade is looking to take out these highs to the bottom of these grey lines at 43.21. This is a poor high. The setup here, as you can see, there's a sort of like compression structure that's going on into the 2 o'clock cash opens, that's 2 o'clock London time, where the market breaks out and pushes higher. The trader actually puts the position on a lot earlier, like much down here, sort of in this bottom left white box inside the larger white box. So, you know, that's kind of like the trade obviously lasts quite a long time, and it's kind of like pre-positioning and then the move. Okay, let's look at the setup on the next slide a little bit more. Now, the chart here, this is an hour, actually it's a 30-minute chart. So this here, I've chosen a 30-minute just because it relates back to the profile, so you can kind of imagine, where you would have like a ledge on a profile. So, for example, where we've got these, where I've got the arrow saying congested highs, you can see that, across 2 days, this sort of high at 21s is kind of what auctioned into 3-4 times, or 5 actually. So you've got, obviously very vulnerable structure there, which is likely to get retested. Now, the line that I've labelled there with inflection point, which is the lower of the grey lines, that level, you can see the market's kind of come up, and the market sort of traded above, traded below, traded above, traded below, and so it's kind of like a point where the market, where we're getting these inflections, and so you're expecting, while the market's above, it's sort of stronger, below, weaker, and you've seen, in the days leading up to this trade, there's been some pretty sharp moves to the downside that have then pulled back. And so I suppose now after, the downside being rejected, you're thinking, okay, can the market play high? Now, there are a few more things, because what's really difficult about when this trade was executed, which was in August, all of the markets really were quite hard to trade. It was a really low volatility environment. The volumes are quite low. And so generally taking a breakout trade was almost a sure way to lose money. And so this trade, which is a breakout trade, was very hard for the trader to execute, and hard because, you had to sort of fight against everything the market had been telling you, because, as I said, these sort of like aggressive breakout trades weren't really being rewarded. Now, what made this particular trade good, well, you obviously have this really juicy target up here, but you also have a few other things. So you've had equities broken out this week, USD holding an offer, or Euro bid. You also had Tropical Storm Laura has been upgraded to a hurricane, and then Brent crude had broken higher on this, but sort of the US WTI crude is lagging a little bit. So, there was sort of like, I suppose, like some sort of like news-based events, some correlations, and just the straight technicals from this market that were all adding up. And so in this environment, this low volatility environment, if you were going to have an opportunity to play a breakout trade, then, this was the best sort of chances you were going to get. And so you had to really just believe in this, in the setup, kind of as a whole with all those pieces involved in it. And go for it. Okay, so let's try and summarize this. So you have this vulnerable structure to the upside, which was these congested highs at 43.21s. So the highs were not traded out in the overnight session, so they were still, really ripe, and should be something that the market looks to test. There are correlations in play with equity strength over the week and weaker dollar. The tropical storm Laura being upgraded, and then Brent already pushing higher. And then basically just the fact that you needed to trust in this picture in this low volatility environment. The trade idea was pretty simple. Look for a break of the congested highs. So yeah, pure breakout trade. These highs should act as a magnet, right? When you've got these kind of like poorly auctioned highs, the market really needs to go test it and sort of see, and resolve this and figure out, okay, are we strong or weak? What are we doing around here? What's the sort of balance of interest between the supplier, the buyers and the sellers? And then, just to again touch on that point about the environment the market's in, you had to trust in this complete picture and the fact that, more than one thing added up. Often, in a sort of a high volatility environment, maybe just one factor is enough to make you believe in an idea. And in an environment like this, maybe you need multiple factors to really believe in the idea. And here you were given multiple. So yeah, you need to trust in that. And then the trader also looked to pre-position a bit. And you could see that from the 1 minute chart, which we'll see again. So just the little white box where I put entry. So, there was an opportunity there to pre-position. And we will look at that. So the two sort of like the bigger white box that surrounds everything, that is, basically the complete trade. What we're going to look at is some price action of the entry, and then also look at the breakout on the cash open. You won't see all of the position closed out because he keeps about 20 lots on for quite a while, for about sort of 50 minutes after the video starts. So we're not going to sit here for that long, but you get to see sort of the bulk of the move. I'm just going to try this pen one more time, but no, okay, I can't draw this time, sorry. All right, well, let's kick into the videos. Okay, so crude oil is the one farthest to the left, and he's already 50 lots long at 80s. So this is a really short clip, and basically the market's been trading, a little tight 1 minute sort of consolidation structure, sort of below 80s. And so what we're going to see here is the market will sort of trade a little bit lower, a couple of ticks lower. There isn't, any sustained buying that comes in when it pushes out the bottom of that 1 minute structure. And then the market pushes back higher. And then it sort of stalls in an area. And it actually pushes high quite easily, and then it stalls in an area sort of around 80s, and then he gets aggressive, as soon as you see buyers come in. Because I suppose what you're seeing there, and I can probably talk to it as we go now, is the fact that, the market isn't really facilitating enough trade, and so the buyers have to search higher to get that trade, to get the volumes. Okay, so here we go. So the market's trading, sort of 3 lots into 76 at the moment. 3 into 77. So it's sort of, trading around 76, 77. There's a bit of buying there into 76s, a bit of selling into 75s. All right, 1 lot down into 75s. 2 lots back into 76s, now trading back into 77s again. So not a lot of volume came in down at sort of 75s. All right, and then quite easily the market traded one sort of big bid through there and straight back up to 79s. Okay, so what this is sort of telling you is when the market sort of tried the lows, it didn't bring new selling into the market. So now we've got to ask some questions of the upside. So we traded 80 before, and now 79s. Okay, 20 lots-ish into 80. Now 30, so there's a bit of buying here. Price action's still pretty slow, 1 lot into 81. 1 lot back down into 80. So very slow market here, so 20 lots trading at 80s. So what we're not seeing here, as I was saying before, is great trade facilitation, right? We saw that nobody wanted to sell before, so now we're asking questions of the buyers. The buyers aren't particularly getting a lot of interest here. Now 17s into 80. are they going to start searching higher for more volumes? That would be, what we want to see to answer this question is about, okay, do we have some big buyers here? Do we have some hungry buyers? 6 lots into 81s. So still trading 80-81s. There was a little bit into 82s. All right, trading more into 82. So now it looks like the market is trying to search a little bit higher. Okay, we want to see a bit more flow come in now. 20 lots into 82. 37 a bit higher, and he just went in there 100 lots and then added with another 100, bringing the average price from 80s up to 86. Okay, and you can see here, so as the market sort of started to show that it did want to buy more, as you got some more interest coming in, you saw a bit of size into 82s, 83s, 84, really aggressive at market. Okay, and that is the positioning for the entry. Where we get up to with the next clip, the size is a little bit bigger, but that is the core entry for the trade. So, okay, this next piece starts just before the cash opens. So there's, I don't know, maybe sort of 10 seconds before the 2 o'clock open of oil. And you can see now the position's 260 lots long. So we're just going to have a look at how the market opens and how the bulk of the move plays out. So what we saw before and sort of how the market got here was this really grindy move, and now it's above that kind of inflection point, and you're looking for the market, just to get aggressive and see if we can release and attack those highs. And so nicely positioned, so not really under pressure here, and you can let the market in the open sort of play out. If you can remember from the 1 minute chart, there was that compression structure, so sort of flat highs and increasing lows. So now you're sort of that there's a sort of energy built up in the market, and looking to see what in what way that can release, and this release or this sort of compression structure quite nicely coincides with the cash open. Okay, the trading around double O's. The cash market has opened now, and it tried a bit of an auction lower. What are we trading around? Sort of like 99s at the moment. Now I want to see sort of higher highs. Again, if we're seeing this, we want to see the market continue to bring its lows up and then also drive higher now. It should be breaking from this flat higher structure that we've seen for the last couple of hours and that grind phase. Okay, so there's a big order there, 04s, that was taken out and the market's pushed higher up to 07s. So then there's another large order there of 150 lots, about that, 140 at 09s. Again, the market's gone and taken that liquidity. There's also a large order there, sort of the second bid that keeps following the market up. And again, chasing now at 15s, we've got some more, about 200 lots. All right, and the market's trading that out into 16s. Now up here, 20s is another large order. So one of the things you notice is that, when the market really wants to do a move, or it's really searching for trade, when the buyers need something, these large orders should act like magnets, right? And you can see each time the market's going to it and pushing higher. So now it's blipped up to 25. Remember that level we wanted to resolve was 21, so you've met your target. So now you've got to ask some other questions about the market. Okay, do you want to stay in this trade? And right now you've seen the market's looking for liquidity. So again, here at 26s, there's a big offer, and even 25s is really well offered. So as long as the market still keeps this price action of hunting for size, then you want to stay with this. So you can see he's still full size, even though we've gone through the target. So now up to 31s. At 32s, there's another order of about 150. All right, how's the market going to trade that out? All right, it's gone and taken 32s, 33s is offered. So we haven't really blipped through this one. So this is the first time where the price action's a little bit different. Actually, you can see now position now reduced down to 100, right? 100 lots. So This is the first change in this aggression. But even though it's the first change, there hasn't really been any sign of selling strength. So there's still quite a large sort of core position left on. And so now the question becomes, what is the market going to do do now? We've got to see what sort of structure we build. So now trading down into 29s, up into 30s, and then pushed higher up to 34. So we've extended upwards by 2 ticks. All right, the market's coming off down into 29s. So, okay, the market's quite likely to sort of test down a little bit now because it pushed through the highs, and you can see it took a little bit off there. It pushed through the highs from 32 up to 34s, and it didn't, bring in any more buying. So it wasn't just like it ticked up a little bit, and then people were desperate to get more, and we pushed higher. And it was like, okay, we've gone a little bit higher. No one came in there. Now probably need to go down and sort of, see if the market can facilitate trade here. If people are happy to buy and happy to sell here, then the buyers shouldn't be desperate to push higher to look for volumes. Okay, so the market's pushing back up into these 30s. Now there's another big order there at 39s for 130 lots. Okay, trading back down to 26s. So now we're kind of asking the question, all right, are we going to keep searching higher for liquidity? Is trade going to keep being facilitated here, or are we going to drop off? That level 4 was 21, so we haven't quite got there. So for the moment, the market's looking pretty strong. So down to 26s again, so sort of 26 seems to be holding pretty good. Trading 28s, 29s, up into 32s. All right, so seeing some aggression here to a new high, all right, and still ticking highs. The 37s, 39s is that size. Trade a little bit into it. It's real. All right, straight through it up to 41s. The next bit of size is up here at 45s. Okay, the market is searching higher. All right, so that 45s is still sitting there. I think just took another 20 lots off. So there's some pretty good trade facilitation. I think before we were seeing about 150 lots trade at 39s. All right, market's trading now a bit higher. Pushing to the extremes. Is it going to tick through the top and then go and search, and then go sort of take that liquidity at 45s? Position size is down to 50 now. Sorry. All right, almost at the 45s. Okay, trading into it. The size is still there, so it seems like this is a real order. Now these buyers should go back and trade that out. Yep, there we go, 45's taken, but didn't blip through. Okay, that's another sort of price action change, right? Every time we've seen the market go and trade a large order like that, it tends to go straight through it. It has actually gone through, okay, but we are seeing sort of a bit of a change here. Then at 50s again, there's a bit of size that was taken. Now again 55s. So all right, he took another 10 lots off. So you can see here that maybe those bits of price action, those changes like we were talking about, that they didn't really push through immediately, is suggesting that, okay, maybe there isn't quite as much competition in the buyers as there was before, and that makes sense, right? We've come a long way and done a bit of buying. Okay, so yeah, 55s, at 55, sorry, there's 130 lots on the offer. So again, we can start to ask questions a bit about, okay, how hungry are these buyers now? Are they still, like they were before? And so at that last bit of price action, we didn't really push straight through. So, okay, now starting to come out another 10 lots. Right, so the fact that we're not really pushing higher for that is obviously, suggesting that the market maybe isn't as hungry for volumes as it was before. And so, okay, now let's see, so traded 54, so just underneath that size. The market's pulled back a couple of ticks, so pretty small rotation. All right, can it take out the 55s? And then also, how will it do it? Are we going to see the market push through and carry on? Or are we going to see sort of another sign of maybe a little bit less from the buy aggressiveness? Okay, push through 55s up to 57s. Trading 55s now. All right, there's some selling below. Okay, reduce the position size down to 20s. So we didn't sort of blip through and continue. We sort of pushed through and then fell back and auctioned. So yeah, that is basically all I'm going to show you, because as I said earlier, the last 20 lots is held to see if the market can test higher. And you can see now we've had quite a large auction back. And so, the core position's off as it probably should be. And, now the market's sort of got a less aggressive auction. Okay, let's leave that there. Okay, let's go on to the last slide here, which is, oh, sorry, I've gone the wrong way. Just key takeaways from this. So, firstly, a big sort of obvious thing here was that there was this change of session. So you could see that the change of session here was actually quite important, because the market had that compression structure, right, which was like a little bit of a grind. It was hard work for the market. And in that structure, the sellers have been holding, highs, and the buyers had been stepping up with high lows. At this stage, with the change in session, bringing in potentially new participants, that's where you're looking for some sort of explosive energy into the market and potentially an open drive, which is exactly what we saw. With that in mind, if you weren't the sort of trader like he was, who pre-positioned early, you could have got in, with the price action at the open. Now, another sort of key takeaway from this is, when you have a lot of information lining up, you can have confidence to pre-position for the move. Now, information from this came from technicals. It also came from news, correlations, and not even just correlations of the day. Correlations, broader equity strength for the week, and how that tends to also work with oil. So, you had a lot of things here from, even a bigger picture that sort of said, okay, we can have strength, we can believe in strength in the market, and those poor highs. And so all, those poor highs should act like magnets, and all the other information is saying, well, we're not going to get in the way of the market acting like that. In fact, it's sort of supportive of those levels acting like magnets. And so those poor highs at 21s. And so, when all of this is there, you can sort of trust that the market's going to work its way up to that. And so you can think about, structure and the auction on the day. Can I get in this early? Is there a way I can feed into the bigger trade idea earlier, so that when the actual trade comes, I'm not, not under pressure. Plus, it also allows you to get lots of size on. So, final point here is that it can be hard to find the confidence to play breakout in sort of low volatility environments, which is like this. And so, again, to what I was saying with the point above, when when you've got a lot of information lining up, that's the time where you can be really confident in your trade. And so, under sort of, I suppose I said earlier, in really volatile environments, maybe you only need one piece of information, but then in these environments, maybe you need 2 or 3. And so if you've been finding that your trades haven't worked, but only on sort of one strong piece of information, you need to remember when you have more than that, all right, now maybe you're armed with 3 really strong pieces. Maybe it's news, correlations, technicals, as in this play. Now you can really believe in your long, and you should be willing to break through that sort of like barrier of fear that you probably have in yourself, because this is a time where you're armed with enough that the odds should be in your favor, right? Even in this difficult environment where you're not usually being rewarded for a breakout trade. Okay, so these are the the sort of like the core takeaways from this. Hope it was interesting, and I will be back next week with another one. All right, thank you. See you later.